Hello traders, you're welcome to this video and you're welcome back to the Forex Geek channel. All right, so if you are looking to strengthen your trading strategy and dive deep into the tools that can really make a difference, then you are in the right place. The Forex Geek channel is for you. All right, now in this particular video, we are going to talk about market strength indicators. Okay, market strength indicators. These indicators are essential tools that every forex trader should know. All right, indicators that can tell you the strength of the market at a given point in time. All right, they are important indicators. Whether you are new to forex or looking to refine your trading strategy, this video will break down the importance of these indicators and how to use them to your advantage. So make sure you stick around, hit that like button and subscribe so you never miss out on more valuable trading tips. So let us just start with the basics. What are market strength indicators? In simple terms, market strength indicators are technical tools that help you access the overall strength or weakness of a price trend. Okay? So these indicators measure the momentum behind the trend, and they show you how strongly the market is moving in one direction. They are crucial because they help you confirm whether a trend is likely to continue or if it is losing steam. Okay, so it can tell you when a potential reversal is about to happen. All right. Now you can think of such indicators as your early warning system, alerting you to changes in market momentum before they fully unfold. Okay, remember that in forex trading, it is said that the trend is your friend, right? That's the saying. But while following trends is key to success, you also need to recognize when a trend is losing momentum. Okay, it's very important to know all these things. All right, so that's where market strength indicators come in. If a trend starts to weaken, market strength indicators help you to spot that shift early so you are not caught off guard when a trend reversal happens. So now we are going to be looking at a few market strength indicators. Let us start with the RSI, the relative strength index. Okay, one of the most commonly used market strength indicators is the relative strength index, or the RSI. Now, as we can see, the RSI measures the speed and change of price movements. It gives you a number between 0 and 100. When the RSI is above 70, it suggests that the market is overbought. And when it is below 30, it signals that the market is oversold. Now, these levels indicate when the market might be overextended and due for a pullback or reversal. All right. So the RSI is just one example, but there are others like the average directional index. Let me add the average directional index to the chart. This is just one of the examples of market strength indicators. Okay, the average directional index tells you the strength of a trend. Okay, the ADX does not exactly predict the direction of the trend. It rather tells you the strength of the trend. Okay, so when the ADX line is above the 25 level, more importantly above the 30 level, it shows that the trend is strong. For example, we can see in this case, you can see the trend was quite strong. When you have the ADX value above the 30 level, so you can have some extra confidence in that trend when you have the ADX value above 30. But if the ADX value is below 30, you might see some consolidation. For example, you can see what happened here. You can see that we had, when the ADX value was below 25, you can see that there was consolidation. All right. Now, another example of a market strength indicator is the commodity channel index. All right. So I'm going to be adding the commodity channel index to the chart right away. Okay, the commodity channel index helps you to spot cyclical trends in the market. right? It helps you to spot cyclical trends in the market. When the CCI moves above plus 100, when the CCI moves above plus 100, it indicates strong upward momentum, all right? While values below minus 100 show a downtrend. So how do you actually use these market strength indicators in your trading? Okay, first, let's discuss confirmation. One of the most important things you can do with these tools is to use them to confirm trends. For example, if the RSI is in overbought region and the ADX is above 25, it's likely that the current trend is strong but may soon reverse due to being overextended. Okay, so this gives you a heads up to consider exit strategies or prepare for a potential trend change. Next, these indicators can also be used to find entry points. For instance, if the RSI falls if the RSI falls below 30, for example, if it falls below 30 and starts to rise, it could signal a potential buy in an oversold market. Similarly, if ADX is showing increasing strength, it suggests that the trend may continue and it could be a good time to enter in the direction of the trend. All right. Now, one of the best ways to use market strength indicators is to spot trend reversals early. We all know that trends don't last forever, but being able to spot a reversal before it's fully formed can be incredibly beneficial. So the RSI, when moving from overbought to oversold, right? When RSI moves from overbought to oversold, or vice versa, is often a precursor to trend changes. So you might want to pair that with a drop in ADX, and you've got a strong indication that the trend might be losing strength and a reversal could be on the horizon. So one key thing to remember is that these indicators are not always 100% accurate on their own. They work best when combined with other analysis tools such as support and resistance levels, candlestick patterns or moving averages, etc. Now, integrating market strength indicators into your overall trading strategy is straightforward. Okay, so basically, when you want to do that, the first thing you should do is to confirm the trends. All right, you can make use of the RSI, or the ADX to check if the trend is strong. Make sure you confirm the trend first. Okay, a trend with a high ADX reading and an RSI showing overbought or oversold conditions might suggest a potential reversal or continuation. Okay, then the second thing for you to do is to spot entry points. So you might want to use the indicators to time your entries. If the RSI shows an oversold market condition, for example, in this case, and ADX confirms a strong trend, you might consider entering a buy position. All right. Finally, set your exits and reversals. Market strength indicators also help with exits. Okay, if RSI, for example, shows a trend reversal and the ADX begins to drop, it could be time to take your profits or cut your losses. All right. So to sum up, market strength indicators are quite efficient indicators. They are efficient tools. They're powerful tools that can help you measure the strength behind price trends and identify trend reversals. Whether you are using the RSI, ADX, or CCI, these indicators can give you valuable insights into the market's momentum and help you make more informed trading decisions. By combining them with other analysis tools and strategies, you can improve your chances of success in the Forex market. All right. Don't forget to like, subscribe, and hit the notification bell so you never miss out on the latest trading tips. Thank you for watching, and I'll see you in the next video. Happy trading.